I want to talk to you about ways to get the lowest credit card processing fees this year, especially when it comes to taking advantage of what the industry is actually offering, but also what the credit card processors themselves are offering. Okay. So if you are a merchant, and I don't care about the sector you're in, you want to really pay attention to the top hacks I want to share with you. So the first thing you want to do if you want to get the lowest credit card processing fees, you need to choose the right pricing structure. Don't let them actually play games with you. Don't actually fall for those pricing shenanigans. Sometimes those credit card processing companies, they're pretty good when it comes to some tricks and hacks. You do not want to fall for any of that. So you need to choose the right pricing structure in terms of your specific sector. See, every sector is actually different. So the right pricing structure will be different for your sector versus mine. Okay. So you need to get familiar with how credit card processors make money, especially vis-a-vis your industry. So in the realm of payment processing, there are four main types of pricing structures. You have interchange plus, you have tiered pricing, you have flat rate, and you have subscription pricing. So interchange plus actually is interchange. It's important to understand that when you familiarize yourself with this pricing models, you're able to figure out the right one for your business. So when I say interchange plus pricing, this is actually one that, for instance, Square will charge you, Square or Stripe. Okay, so with an interchange plus pricing model, the payment processor breaks down your fees into two components: the interchange, that is the fees paid to the banks and credit card networks, and you have the markup, which is actually added on top of the interchange fees. Hence the term interchange plus. Okay, so with the interchange plus model, you're able to see exactly how much the transaction actually is paid out, how much of the transaction is paid out to banks and credit card companies, credit card associations like Visa, Mastercard, American Express, and Discover. How much goes to your credit card processing company. So that's for interchange plus pricing. You also have a tiered pricing. That's the second category, the second type of pricing. And this refers to a pricing structure wherein the credit card processor categorizes transactions into different tiers, like qualified, mid qualified, and non qualified. You have tiered pricing is the least favorable pricing structure for merchants. Okay. And finally, you have flat rate pricing in addition to subscription pricing. Subscription pricing just means that you are basically paying on a monthly basis. As you can see, not all pricing models are created equal. So after familiarizing yourself with the right pricing structure, you need to shop around for better rates, right? Don't just assume because you are with a bank, you are with a credit union that the financial institution has your best interest at heart. Not necessarily, because they are in business to make money too, and whichever way they can actually plot to make money, they will do so, right? So it's up to you to know exactly what you want and what you need. So when you do the research and look for better credit card processing rates, you are doing the best possible thing for your business. And this is not just in the short run, but also in the long run. You have to think about this credit card processing thing from a scalability point of view. Okay, chances are your current processor is not giving you the lowest rate, and they are tacking on ancillary fees to your monthly bill. Make sure that your business is getting the best deals for the services it really needs. Okay, and never pay a fee if you don't know what it is and what it does for your business. You got to have a clear idea about what you're paying for. Otherwise, you are just throwing money out of the window, and then that's a bad decision right off the bat. So you got to be really clear about that. So you want to choose a payment partner that offers transparent pricing. And when shopping around, you want to ask the processors for a breakdown of their rates and fees so you know exactly how much you're paying per month. And if they're charging you, like let's say on a pay as you go model, make sure you understand how much you'll be paying if your transaction volume actually goes up. Because in some cases, if your transaction volume goes up, you'll be paying more money. Okay, and those fees will eat into your revenue. It will eat into your bottom line. So, and you have to see whether or not you want to go with a subscription model or just a pay as you go model. Okay, if you want to get the lowest credit card processing fees, you need to negotiate with your processor. You have to really sit down, you have to give them a call, you have to have a conversation with someone. Don't just assume that the fees that they put on their website or the fees they have, let's say, in their app are actually the final fees. No, you have the possibility to negotiate. Okay, in this economy, everything is negotiable, really, if you think about it, or sort of. Okay, and one thing for sure, when it comes to credit card processing fees, those are negotiable. The reason is that you have so many providers, you have so many companies. So if your company doesn't want to negotiate with you, just go elsewhere. Sometimes you need to make your processor see that your business adds value to their business. In other words, you are adding value to their bottom line. So you have to make the company want to keep you. So convincing them your business is valuable is really important, right? It's all about raising the bar a little bit. It's all about raising the stakes, not only for them but also for you. So you want to, for instance, you can leverage your transaction value if it's high enough, and that will say enough about your value to them, especially if you know that you've been with them for a while, like for many years now. So if you shopped around for better rates first, then you even have more leverage to negotiate your rate with your current processor. Okay, so you can say something like, "Hey, listen, this company doesn't charge a stipend fee or a batch fee. I'm going to switch to them." And very simple, no threat, just a very simple conversation. And if your processor doesn't try to keep your business and make you happy, it's actually time to switch. It just means that you're not that important to them. You're not really critical to them. One thing I want to insist on is the fact that if your payment processor agrees to lower your rates, make sure to get the new agreement in writing. It's also best to keep a close eye on your merchant statements in the succeeding months to confirm that they have truly lowered your rates. Especially from a scalability point of view, this is exactly the kind of setup you want to have. Okay, so number one, you want to choose the right pricing structure. Number two, you want to shop around for better rates. Number three, you want to negotiate with your processor. If you want to lower your credit card processing fees, you need to reduce the risk of credit card fraud. I mean, credit card fraud is pretty rampant in this industry, big time. And if your industry is even more exposed to a credit card fraud, that even could make you an at-risk sector, an at-risk merchant. I mean, you have all kinds of risks, risk elements that credit card processor have to account for, including your credit history. So if you have bad credit, this is actually a red flag right off the bat. If you are in a pretty quote unquote sensitive industry, this could be a red flag too. Like industries such as marijuana or adults, those could have a high, not could, those are high risk. Okay, high risk high risk industries. So if you are considered a high risk merchant account, your fees are going to be higher. High risk industries mean that there is a higher chance that your company will experience credit card fraud. And there are two ways you can reduce this risk. You can actually mitigate the risk. You want to swap as many cars as possible. And the other way to reduce the risk is actually provide security information. Let me explain. When I say provide security information, you want to provide security information that protects actually the cardholder and validates their purchase. You can do this by entering the billing zip code and security zip code. So this is really cool. And when I say swap as many cards as possible, the rates actually set by card brands, let's say Visa, MasterCard, American Express, are higher when the cards are keyed in based on fraud risk. So swiping the majority of your card transactions actually is the one way to reduce the risk. Okay, if you want to reduce the risk of credit card fraud. Swap as many cards as possible. Also, if you want to get the lowest credit card processing fees, you need to really eliminate the third party. I mean, because the third party is representing an additional extra layer of cost for you. Let me explain. Most credit card processors, but not all, don't actually process transactions themselves, right? So if you are going through a third party, that means that you're paying somebody else's bill, somebody else's extra bill. So if you think about credit card processors that don't actually process transactions themselves, basically you're losing money because those processors save on processing fees by signing up with a bank or institution that does the processing. Okay, this means what? It means that on top of paying your processor's fees, you're also paying middleman markups. If you think about it, and so you want to ask your current processor if they use a middleman. So when searching for a new one, ask the same thing. You will notice the difference. And again, sometimes the delta can be huge. Okay, it can be really huge. You will notice a difference in fees and markup between the ones that do and the ones that don't use that third party processor. Especially if you are processing credit cards across various industries. Okay, because various industries and various geographies. For example, if you are in the states, your fees, you will see that the markups that you pay for will be lower than if you go with a merchant that's actually doing things internationally. Okay, in other words, if they actually have if they cover multiple geographies, multiple localities, you're paying for not only markups in U.S. dollar but also in foreign currency. And you know that when it comes to anything about foreign exchange fees, that actually calls for those fees call for extra costs. Okay, so foreign transactions call for extra fees, not just in terms of what your bank is charging you, but also those card networks are charging, but also what the originating bank and the acquiring bank are charging too. So you have a lot of cost in between. Also, if you want to lower your if you want to get a lower credit card processing fees, you need to also think about setting up your account and terminal properly. See, the thing is that a lot of merchants don't know that the way they set up their account and terminal can have an effect on how much they're actually paying. It does have a big impact, and so one simple mistake could lead to higher processing fees, especially if you do things improperly from the get-go. So what happens here is that setting up your account the right way from the start can make all the difference if you have the right setup. Okay, so provide the correct business information, such as type of transactions, the type of business, and the frequency of transactions, because this matters to many processors, but not all. You also have to pay attention to your EIN, to your employer identification number, but also your NICS code, because some the NICS codes, NAICIS, the NICS codes are actually tied to specific industries. So if you put in the wrong NICS code, you could be seen as a high risk merchant, even if you're not. Okay, so be very careful about the sort of NICS code that you put in during the application process. And some merchant some credit card processing providers actually are pretty thorough when it comes to the data they collect. Okay, so be very careful there in terms of the kind of info that you're providing. It's the same thing with the way your terminal is set up and used. So get into the habit of batching transactions within 24 hours to lower the number of transactions for that period and to reduce processing fees, because the more often you process, the more often you process payments, the higher your cost. Okay, so batch everything in within 24 hours. This method is more cost effective than batching every few days or a couple of times per week. So the longer you wait to settle the batch, the higher the fees and the rates from credit card companies too. So just be aware, be mindful of timing. So if you want to get the lowest credit card processing fees, you also need to accept cards that work well for your business. See, the thing is that every industry is different. I like to say that, and every industry is different. And if you are in the entertainment sector versus the hospitality industry, or let's say the consultant business, or you have a brick and mortar store, you don't have the same audience, the same sort of how do I say it, potential customers, right? So not all credit cards are treated equally. Certain credit cards, debit cards, cost more to process than others. You need to choose to accept the cards that work best for your business. So to offset the cost of more expensive card types, make sure you are meeting as many qualifying requirements as possible, especially when it comes to scalability. I mean, you probably heard that in the industry, if you're a merchant, you probably heard that American Express, their processing fees actually are a little higher than Visa or Mastercard, right? Same thing for Discover; they have higher processing fees. So you have to really see whether or not it's really worth it for you to accept Discover, or even American Express. And the last thing I want you to really do this year is you want to avoid unnecessary fees. So too many processors bundle and hide fees within other charges. Some fees shouldn't even be added at all, let alone hidden. So take a look at your next merchant services bill and ask yourself what these additional fees are usually for. And if you have any question on that front, please let me know in the comment section. I'll certainly explain to you what fees you have on your account statements. Okay, it doesn't make sense for you to pay for fees that you're not responsible for. I mean, especially when you realize that some merchant service providers are not as transparent as they should be. Okay, and so merchant account providers are notorious for high markups and hidden fees. So something to really think about. So you want to choose a merchant account provider that never charges like unnecessary fees. Okay, especially if you are having a monthly billing solution, for instance, you don't want to have to deal with extra fees on an occasional basis, especially if you are processing a very small amount of transactions every single month. Okay, so this is something you really think about, especially from a scalability point of view. So this is really it. So in conclusion to this conversation, I gave you the top 8 ways to get the lowest credit card processing fees. I gave you the top hacks and now the conclusion. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.